Valuation is always this art of the story you can tell and where that gets you in terms of can they grow into it. I think that I can reasonably say Rocket Lab, if all goes well, can be worth a lot more than what it is today. At the same time, as I say, I don't think Rocket Lab's business today is worth what the market values it today. Both of those things can be true.
From the Defense and Aerospace Report, this is The Downlink, a podcast about the intersection of space, the space business, and defense. Not just what's over the horizon, but what's happening above it. I'm your host, Laura Winter. Unless you're ensconced inside a silent meditation retreat, you know that we are in just the beginning days of a U.S.-led air bombardment campaign against Iran's theocratic regime, or the Islamic Republic of Iran. The U.S. operation is called Epic Fury, and Iran is a spacefaring nation, which explains why it has its own homegrown ballistic missiles. On Thursday, it's believed that Iran used a ballistic missile to target Bahrain's state-run Bapco refinery, setting ablaze a unit within the complex temporarily as that fire is out. But Iran has also hit the oil infrastructure of other nearby nations and ships, and has effectively closed the Strait of Hormuz. That's led to a cessation of almost all oil and liquefied natural gas tanker traffic that should have been leaving the Gulf states, and that has upset world markets. Added into the mix is a less than stellar U.S. jobs report. In February, U.S. companies eliminated 92,000 jobs when economists were expecting payrolls to increase by 50,000. The nation's unemployment now stands at 4.4%. That's up just a very wee bit from 4.3% in January. So traders are worried, and that means de-risking or selling off at least some of their positions. Since Operation Epic Fury began and just over the past 5 days, the Dow Jones Industrial closed the week down more than 2.6%. The S&P 500 is down almost 1.5%. The NASDAQ, which is where most space companies are listed, has been up and down all week and closed on Friday almost a third of a point above where it started on Monday. It also happens to be earnings season. And that's when publicly traded companies reveal their economic data like revenues and costs, and traders feast on the numbers. This week's guest is a trader. We've got Lou Whiteman. He writes for the Motley Fool and has some interesting takes on some of the best-known publicly traded space companies, the macro effects of Operation Epic Fury, and the highly anticipated SpaceX initial public offering, or IPO. Here's our conversation. Hey, Lou. Welcome to the Downlink podcast.
Great to be here. I got to tell you, I'm a fan and I'm very excited to have this conversation. So it's good to see you.
Excellent. That makes me really happy. So let's take this opportunity right here at the top and give the audience a chance to get to know you a little bit. So, Lou, I think I'd be wrong to call you a recovering journalist. And I say that because you have been reporting on and analyzing the market, deals, economic trends for almost 3 decades. You started at American Banker. You spent the majority of your career at The Street. And now you are the Motley Fool's stock analyst for aerospace and defense. And the fun part of being at the Motley Fool is that you put your money where your mouth is. You are an investor. So what's gotten you into space?
So absolutely. And we should say too, I'm glad you said that because we will likely talk about companies where I own the stocks. And, I like to say that up front. So, let that factor into what I say. But yeah, so I will tell you the sort of my origin story here was I was a much, much younger person in the late 90s in Washington, D.C., when, if you remember the late 90s, everything was about venture capital. Every town in the world was Silicon something. Right. And so if you're in DC, that was the Northern Virginia venture capitalists. And it was mostly those Beltway bandits who were kind of off in the corner, like at the middle school dance that no one wanted to talk to. And all of these cool, mostly out of AOL startups that were going to change the world.
God, I do remember AOL, but that's like pushing my memory.
Yeah, there you go. But so a funny thing happened. I think you know what happened in the late 90s and how the dot-com crash. And the next time you show up, those uncool kids that were over in the corner are suddenly the bells of the ball, because suddenly it wasn't like, oh, you're a government contractor. Like, wait, the government's still paying its bills. So that was sort of, in a weird way, like getting to know all of these like tech focused companies in Northern Virginia that suddenly became defense tech. And that was sort of my, and you know, and being in DC and dealing with the industry anyway, but that was sort of my origin story here. Was all of the sudden everyone that I was supposed to be paying attention to was pivoting towards the government.
And now they're all pivoting towards space,
Yeah.
right? I mean, it's huge. You have a story recently with, I think, 8 different companies, defense companies, and every single one of them has a space play.
Yeah. Well, I mean, look, in general, and we can talk about, we all know like valuations have been really good, and you lean to where the money is. And, you know, part of what has happened, just like in every other industry, like there's still a place for the metal benders, right? There's still, but for most of the Cold War, or even pre-Cold War history, the value was these companies that are able to make these massive ships and massive tanks. And increasingly, the value is going to the companies that can make them smart, the electronics, the sensors, the, you know, just like every other industry, defense has gone digital, and space is a big part of that. But so as the value, the economic, the margin, the kind of the in demand moves from just we can build something massive to we can give it the electronics, the gear to make it, you know, lethal, or to make it cutting edge. As the value has shifted there, so has the focus of so many of these companies.
This is like a quick sort of aside, but actually, I am just back from a trip to Seattle. And whilst there, I did meet with a number of folks, companies, city governments, people who give their thoughts and ideas about the space economy. And I do want to push back on one thing. They do say that they need metal benders, that there aren't enough in Seattle to make the number of satellites that need to be made. And I thought that that was really interesting, that there really is a need for people who understand how to use power tools. So,
Fair enough. Yeah.
right?
Yeah, no. Yeah, I wouldn't push back at that at all. There's still the need there. I would say, though, that increasingly the margin, the value, the kind of we're paying up for it is in the other side. And, you know,
Oh, for
maybe
investors, for sure.
maybe that's a problem that solved itself. Maybe if we actually valued that, maybe we wouldn't have that demand. But that's for a separate conversation, right?
That is true.
Yeah.
All right. So here we are. We're recording on March 5th, right? And while everyone has been laser focused on the developments coming out of the US led bombing campaign over Iran, and you've been writing about defense stocks, oil, and cement. So I know that you have a view on just how this undeclared war may affect money, the economy, and the defense sector and the space subsector. So let's set up a contextual framework around our discussion today. You know, like what are the big macro effects of Operation Epic Fury that we need to keep in mind for this discussion about the space sector and the public markets? So yeah, Lou, I mean, what do we need to pay attention to? You know, what is on the macro level affecting markets and investors right now in the public market space?
The interesting thing is that this has been a question that the markets have been asking themselves. There's been a lot of volatility. We're up one day, we're down the next, which isn't a real surprise because the market always takes time to digest. It takes time to normalize whatever's going on. But I think especially this time. And look, just some very, very high level ideas. There aren't a lot of companies that day to day are affected. We're seeing more of that. Like, you know, Amazon has a data center over there, and look at that. So, you know, there definitely are examples. But here's how I think about the macro, and so much of just what's going on in the economy just affects these stocks. We talk about the consumer. And we talk about it as if there's just one person, I don't know, Joe, making decisions like, how do you feel? We all know that's not true. The consumer is a collection of 300 million people, that countless number of households. How are they all collectively feeling about spending? And there's never one answer there. But when times are good, there is just enough of a majority that feels good enough about their checkbook that they are outspending and the economy's good. And then when times turn bad, that critical mass shifts. So if you look at coming into this bombing and coming into it, that we already had some questions. People talk about, they like to talk about the K-shaped, where there's the haves and the have-nots, which is another way of saying what I just said, that there's always some people doing well than others. If suddenly you throw in, I don't know, gas prices go up $1,
Or the Strait of Hormuz gets closed, so
right,
gas
right,
doesn't get out. And it's not, I would like to make clear to everybody, I mean, the United States does produce a whole bunch of oil, so much so that, we are exporters,
right.
but that the price is actually a global market. It's not that we set our own prices, it's the global market that sets that price.
Exactly, exactly. It's set out of a few different places. And yeah, so we can't just control this. The real caution right now, and we can talk about how this affects, space stocks specifically, but the real caution here is that what if just $1 movement in gas is enough to take that critical mass to cut back? And again, probably not cut back completely, but just a little. And it's just, this could be the proverbial straw that breaks the camel's back. Yeah, there's headwinds, but collectively we're doing good enough to all of the sudden just a pullback in spending. And this is such a consumer driven economy, and consumer spending matters so much that will affect corporate spending if they feel weakness. And these things just tend to build on themselves. There's very, very rare that the surprise really is what gets us. It's just suddenly where everything we already knew matters more. And so all of these pressures that we already knew suddenly matter to the extent that they actually push the economy down. I'm not predicting that. I don't think, if we're honest, none of us really know. But as an investor, I'm always trying to keep my reptile brain, the fight or flight, from freaking out if things go wrong. So I try and think about, okay, what can go wrong? And very clearly right now, we have had a great few years. It's going to come to an end at some point. And there are building pressures. And I think we have to be honest with that and say, this could get ugly.
Well, speaking about, ugly, but how about expensive? We have some macro costs that are coming out of this Operation Epic Fury, right? Because from the Penn Wharton budget model, there's this guy by the name of Kent Smetters. He's the director of the Penn Wharton budget model, I guess, group. And he said the hit to the federal budget would be at least $40 billion, and that could go up to $95 billion. And that's just for direct military operations, and that's for 4 to 8 weeks. And that's all for replacement of equipment, munitions, and other supplies. And that has knock-on effects on our readiness, even though this discussion isn't about readiness. That is about readiness, though. And it's also being reported that a DC think tank estimates that costs so far have already exceeded $5 billion. And we are just 5 days in, right?
Yes.
That's a lot of money. And that's even when we're just using drones. I know, those are cheaper, but the bombs that we use, they're not cheap. So this is a really difficult time. And on crude oil prices, I mean, it depends on what kind of crude that you're talking about, but all of them have surged by at least 10%. Some barrels from certain areas of the world have gone up to 38% to well over $80 a barrel. So how that, again, shakes out, because there's so many things that we use or wear or use as a tool or what have you, are actually derivatives of petroleum. And that I find really interesting.
Right.
So we can probably safely estimate that even if this conflict is short, that the U.S. government is going to spend at least $40 billion, right? So that should be good news for the defense industrial base, right? For that replenishment. It might even give an opportunity to make better things, maybe hopefully less costly things that are better at the same time. But that isn't always good news necessarily for all, and not for all space companies. And as I said, I did read some of your articles before we started recording today. And one of them is the best defense stocks to buy in 2026 and how to invest in them. And in it, you have a list of your top 8 defense companies. And most of the names are already familiar to many of our listeners, right? It's got Lockheed Martin, it's got Boeing, L3Harris. And then it has one that I haven't heard of, and that was AeroVironment. It's best known for its drones, but in May it acquired Blue Halo, which gives it exposure to space. But what's and all these companies have a space play. But 8 out of your 10 picks have increased in value since Monday, March 2nd.
Mhm.
But it seems investors have mixed feelings this month and even this week since Operation Epic Fury began. Rocket Lab, right? The go to example of a space company that is closing its business case. It gained almost 240% over the last 12 months. Its market cap is $41 billion. It has an EBITDA of 15% and a backlog of $1.85 billion. And that's really good. But this month, leading up to last week's earnings call, and even after, it seems to be under pressure and it's lost more than 11% over the month. And I got to tell you, Lou, I don't understand. I just don't get this picture. And then there's another company that I've been paying attention to. That's AST Space Mobile. Its stock price is down more than 11% today. That's March 5. And that's after a 24-hour flurry of positive press coverage based on its earnings report. And it's got another defense contract. This one, a satellite communications direct-to-device demo worth $30 million. It's with the Space Development Agency. The program or project is called Tactical Satcom Demo. But if it is successful, it could be a huge deal. I mean, big adult money. So yeah, I don't understand why the valuations or why stock prices are going down. Is this because of Operation Epic Fury? Is this because of the NASDAQ? It's been slowly sliding. Like, Lou, why?
All of the above, and who knows? But let's answer it better than that, right?
Oh, gosh. Okay.
Let's start with defense in general, because we'll break this down into a few things. Because yeah, it's always interesting to me when the knee jerk when there is headlines like what we saw over the last weekend in the Middle East is to buy defense stocks. But as you know, this is a very long cycle industry, and yes, this will probably lead to a lot of replenishment orders. It's almost terrible to say, but the bull case, the thesis for defense stocks is the world is a scary place and you need them. I don't think so. If so, then what happened was thesis confirming, not thesis establishing, right? So there's not really a lot has changed, and the orders that will come in, we're going to see that trickle into revenue for the next few years. So I think it's a little irrational of the markets to just spike higher on these as if it's incremental more demand, and it's more just what we thought was going to happen is going to happen is the way I think it. So I think defense is it's such a long cycle. I think it is the slow and steady wins a day for a lot of, especially the traditional primes. Now, in terms of some of these, Rocket Lab I love Rocket Lab. And again,
What's
Rocket
not
Lab,
to love?
Rocket Lab
Right?
is one I have in my portfolio. I will disclose that. But it is hard for me to justify Rocket Lab's valuation today versus on today's business.
Is that what's biting?
So let's talk about this. I mean, that's not uncommon. Valuation is always as much art as science because we're not paying for today, we're paying for the future. And valuation is always sort of an exercise of this is what I think this business can be. This is how long it will take. And this is how easy it is, or how many, like there are some valuations out there that to me, they just need to, I don't know, reinvent the wheel 17 times to get there versus like, okay, if they're at their current pace, this should happen. And so valuation is always this art of the story you can tell and where that gets you in terms of can they grow into it. I think that I can reasonably say Rocket Lab, if all goes well, can be worth a lot more than what it is today. At the same time, as I say, I don't think Rocket Lab's business today is worth what the market values it today. Both of those things can be true. But when you have that disconnect, when you have more speculative stocks, and I think, it's still Rocket Lab could go spectacularly wrong, right? I mean, I have much more confidence I know, say, what Lockheed Martin will do over the next 5-10 years than I do with Rocket Lab. So when you have these more speculative companies in times of uncertainty, you mentioned the NASDAQ is down. In times of uncertainty, it is again, this critical mass, all a stock price is there's a lot of buyers on one side and a lot of sellers on one side, and it's which side has more and what price they agree to make the transaction. In times when there's a lot of uncertainties and times when we are sort of questioning the future a little bit, you tend to see these more higher valuation, speculative, if you want, although I hate to use that word because I do
I hate
believe
to
in
use
some of these
speculative with
companies.
Rocket Lab, and
Yeah.
here's why, right? Because they've got national security space launch contracts. That's
Hmm.
a really big deal. That's a
Hmm.
big, massive pot of money that they have to compete against others to get. But if you're in the group, I mean, you're already a part of the anointed group, right?
Yes.
The
Well,
government sees
and
you
you're
as a
exactly right.
solid player, like you
Exactly
are
right.
established. You
Yeah.
are going to be relied upon for certain payloads and to take certain payloads that your vehicle is going to be the right fit.
But that said, I mean, and again, I think I know the answer to this, but the neutron, I think it'll all work out. And 5 years from now, we won't care that it's a year late, but it darn well better,
God,
right?
no one's on
And
late.
we don't
No
know,
one's on
you know.
time, right? No one
Right,
is on time. I
right.
like hello, like where's Starship?
Yeah.
Yeah.
I mean, I don't want to like hijack the conversation, but with Motley Fool, we interviewed Peter Beck, Sir Peter Beck, the head of Rocket Lab, and I
Oh,
loved.
and I've interviewed him too,
Yeah,
and he's
yeah.
a lovely guy. At least he was to me.
Oh no, he is, and he talked about. I'm going to hopefully not misquote him, but he talked about the raging cauldron that burns inside him between being an entrepreneur and an engineer. And of course, an engineer says it's never ready. We have to do one more test, and an entrepreneur is go go go, and it's just the mix of the two. And you're right, things take longer, and that tank, from what they said, the tank that ruptured, it was tough to build. But no, I do believe that they'll get there. And so that's why I do believe in the company, but I can't promise you that. So I do think it is. I understand why it would be called speculative, and I do. And again, it's trading at 60 times. Well,
Sorry.
no, I mean, would even be 60 times earnings would be a little more reasonable. But 60 times sales is an elevated valuation compared to most, especially most, hardware companies. Not to talk down this company. I love the company, but I do think that we're just in a period where some of these that just need to grow, the benefit of the doubt sort of slips away from the market when there's more nerves in the market. And I do think that's what's going on right here. I think, the best advice, not that you ask me for advice, but is to have that long-term focus. If you believe that Rocket Lab is going to get there, it shouldn't matter what the next week or two does, or insert your company here. That's hard to do though. Well, in these
When you see
times,
11%,
right, right,
go. But hey, folks, I mean, I mean, 200 and what is it, 30% in the past 12 months that it's
yeah.
risen. So
And
maybe that
let's be
11%
honest,
really isn't a big deal.
right? Let's be honest. Is the business 230% better? I mean, maybe. I mean, they have gotten a lot of contracts,
They have.
but here's the deal. For me personally, and maybe I'm showing my limitations, I have a lot harder time explaining any one day's stock movement than I have a feeling of what can happen over 5 to 10 years. And that's,
Oh,
I'm
feelings.
well,
Feelings.
yes, but I mean, I think again to talk, kind of the Motley Fool's book is we are long-term investors. I'm trying to find companies that can weather the ups and downs and succeed over time, and I'm not going to get caught up in the day to day. I'm definitely watching it because if it turns out that something's going on that proves that I'm wrong about that long-term future, I darn well better be paying attention and know. But I can't begin to explain why things go up and down on any one given day. I'm just looking for the future.
All right. Well, here's the next bit, which is a little bit of the past so that we understand the present and so we have an idea about the future because it's earnings report season. Is there a company out there that you are specifically paying attention to besides Rocket Lab, where you're actually reading the report's fine print and considering the communicated strategy?
Yeah. So I do. If you're doing it right, to me, it's almost like the transponders when a pilot is flying across country. They're checking in to make sure they're on course. That to me is what earnings season is all about. If I believe in a company, or if I'm putting my money into a company, hopefully I'm not going to find many surprises or many. And if you do, but I want to see that they are on course, or if they need a course correction. Something like, just to throw one out, L3 Harris, which as a company I really like, but there are a lot of moving parts there, and there has been for a while.
There have
So
been
I
a lot of interesting decisions, right? I
yes,
mean, there have been spinoffs and, uh, the Rocketdyne part to make themselves more nimble, but they've kept the defense part. Yeah, they're very interesting to watch
and now the
and to
spinoff with the
understand.
Pentagon. Yeah, now the spinoff with the Pentagon, where they're going to, take some of that. I like that. I mean, to me, I see maybe a what looked like a slower growth portion of the business kind of gets an infusion of money, and so they can grow that at a faster rate while also saving their own capital to invest in these other areas. I think it's a neat company, but yeah, no, there are just more moving parts there. So I watched that one. Some of these smaller companies, like Kratos Defense and Security, is one that's just there's a lot of optionality there, which is a polite way of saying things can go a lot of different directions. So I do want to look at that a little closer. Not that you don't look at the big primes, but again, the big primes largely give you what you're expecting. So I think it's some of these younger companies, or some of these more just in motion companies, are where I'm looking. Overall, I don't think it was a bad earnings season. But there's, again, since then, it's almost ancient history now with just current events of the last week. So, we'll look forward to the next earnings season.
And I have to admit to you, I mean, the reason I'm asking you the question is that, yeah, I was interested to see what you had to say, because, I mean, there are some primes that are really interesting to pay attention to, and they're not necessarily American either, right? Because I have to admit to you that I am paying attention to SES. And I do that probably because of the whole story, that they have this incredibly long space heritage. They started in 1985. They have school bus sized satellites up in geostationary orbit. And they know that things are shifting to LEO because of latency, to put faster, better, cheaper satellites on orbit into LEO is easier, and also in MEO. And it's just really interesting to me to watch this process occur, especially because they acquired Intelsat. And Intelsat has assets in MEO, or did, because they're now part of SES, right? And when SES bought Intelsat, they not only acquired the company, but they also acquired the debt.
Right.
That has made it so Moody's has downgraded their stocks. Right. So it's
Yeah.
just really big challenges that they're trying to get after to change the company for the long haul, and to be able to, again, as I say, compete, and to compete with Alexa Starlink, to compete with OneWeb, to compete with Amazon Leo. So yeah, I find it fascinating. I have no opinion because there's just no way I could. But from what I see, it looks like Abdel Salah is, chewing gum, walking, and texting one-handed all at the same time. And it's just, so that's what I'm paying attention to.
I'll say this about them too, is I think it makes sense to try to combine all of the or to one
I mean, they
big.
are the epitome of legacy.
Right, right. But instead of having multiple smaller legacies to try and do it, but to your point, I think the number I saw, revenue, adjusted debt, and we have to talk euros here, but like from a little over 1 billion euros to over 6 billion euros in debt.
Yeah.
The way we like to look at that is, one of the ways, net leverage is, I think,
And
what
Intelsat accounts, I believe,
yeah.
for
Oh, it's
3.1
theirs now,
billion.
though. It's theirs now,
Oh
though,
yeah.
net leverage. So like debt over earnings, EBITDA, something like that, just some measure of profits, went from a little over 1 times to almost 4 times. That's dangerous territory. That's, it's, they can do it. And they do have a decent backlog, and they do still have a business. Like you say, like these Leos coming after them for pricing. Is there just, or is this a world where we can survive, but we're not as profitable because of all of this. It's a tough, they have their challenges in front of them. I don't think the story is written. I don't think they're doomed, but this is a weird new competitive world that they are fighting. And, we'll see, I guess.
Exactly. Exactly. I don't think anything negative because I do think that the people that are leading the company are adults. And I've liked some of the press releases that, yeah, we know this is a problem. And I think that's actually really helpful that they say that.
Yeah.
Yes, we know it. And I don't know. It makes it so it's not as scary,
Mhm.
right? That they're not trying to hide it.
Right.
So anyway, speaking of things that are hidden, right? There could be a confidentiality filing, right? Which
Mhm.
means there's going to be a lot that's hidden. That's the SpaceX IPO.
Yeah.
So first of all, what is a confidentiality filing? What does that mean?
So think of it as sort of like a rehearsal for an S1, which is the IPO filing. And, this is something that's increasingly used. It used to be an exception the SEC would make just if you have, competitive secrets or sensitive data, you don't want to reveal too early. But it's also sort of like, it's almost like giving your teacher a draft of the essay before you turn it in, where the SEC can review the filing. But I don't think SpaceX has filed this yet, but SpaceX is reportedly preparing this confidential filing, which would be the first step towards their IPO. We will find out all the numbers eventually. I think the rule is you can only do this for, I think, 15 days, or it's so we will see the numbers before there's a IPO, and they would like to do the IPO in the coming months, so it won't be too long. But yeah, companies like to do this because companies don't like to talk about anything until they have to. But it is sort of just the first step on this much discussed SpaceX IPO that it seems like is sooner rather than later it's coming.
All right. So that goes into speculation, right? Because it's all confidential. And that's the wonderful thing about the non-confidential filings, because then you can actually see where the numbers are and see what stuff is based on, right? So SpaceX is claiming 150 markets, but only 112 are actual sovereign nations. They have 10 million subscribers now. That's what they say. Again, we don't know. That's what they say. But all of this taken together is to justify a $1.7 trillion valuation, or roughly 170 times their reported, and this is not a filing, this is what they say, is their Starlink revenue. And that they need to hit 50 or 60 million users. What does all this mean? I mean, is this worth it? Is that really worth $1.7 trillion? And I say this with a bit of cynicism because when SpaceX bought XAI, right, another in the family purchase, but from month to month, when some venture capitalists, some sovereign wealth funds, bought into XAI in January, and then the next, what was it, 20 days later, SpaceX buys it, the valuation jumped.
Mhm.
And so to me, I just feel like the numbers are funny. Sorry, but I
Well,
just don't get that. Just because, days on the calendar changed, not much of the business changed.
presumably, I mean, there are different, valuation means different things in private companies than public. That's why we're going to, at some point, the question of can they justify 1.75 trillion or 1.5 trillion is up to the market to decide, and I do think
But on what?
well,
Right?
I'm going to use some a little more forgiving numbers because, of course, this business is more than just Starlink. Total company wide, the whispers, and again, we don't know this for sure, but something like 16 billion in revenue and something like 8 billion in EBITDA. And EBITDA isn't a great, but EBITDA is good enough for this. It's earnings before we. I wish I could exclude taxes and stuff like that from my earnings, but you can't. But that's the way we do things. So, but 8 billion on 16 billion in revenue, that paints a deceptively healthy picture, if anything. At that 16 billion, even if we go to 1.5 trillion, I can get it down to about 90 times sales. Now, I just told you that I thought Rocket Lab looked expensive at 60. So we are still speculative. But again, Especially at an IPO, so much of this is just simple old supply and demand. And there is a market and there is an interest for this. So can they get it? I think maybe they can. I mean, for one, there's a lot going on behind the scenes. Officially, an IPO can't join an index. It seems like they're trying to lobby there and maybe on the NASDAQ side. If you are part of an index, there are a lot of funds that just have to buy this, whether they want to or not. That will help. I don't get a feeling just from, talking to investors. Look at all of these, whether it's ARK or others who have just created funds to that basically we can get you private SpaceX sales shares. There is a lot of demand for this. Is there 1.75 trillion? Maybe. Remember, they're only going to sell a small part of the company. So they don't need to sell $1.75 trillion worth of shares. They have a fraction of that is what they have to sell. There are a lot of people. One thing that Tesla has showed us is there are a lot of people who are willing to say, I am curious. I am a believer in Elon Musk's vision of, creating value over time. I am willing to buy into that. And this is going to be, if anything, it's almost a better vehicle for Musk because we have combined XAI, and it is sort of just a bet on Elon building something from here. And I would think that whether it's 1.5 trillion, 1.2, it's a big number of people who are actually willing to take that bet. Whether I do, I'd have to see. I honestly, I don't like IPOs are so hard anyway. I like more of a track record, so I like to give them time. But I don't doubt that there are a lot of people who are very, very eager to see what this looks like and maybe kick the tires on it.
Well, I'm certainly eager to see what it looks like. Like, I really can't wait for those SEC filings to be public for sure. And that is definitely some filings that I am going to read the fine print on. Lou, thank you so much for making the time to come on the Downlink podcast.
This was so much fun. Thank you for having me.
That's it for this week. For your daily dose of award-winning defense coverage, listen to the Defense and Aerospace Report with Vago Muradian. And for the maritime domain, listen to Cavis Ships with Chris Cavis and Chris Cervello. And get your air domain news and analysis from the Air Power Podcast with JJ Gertler and Vago Muradian. I'm Laura Winter. Thank you for listening.